Gold, again, gold lost its glow when Trump came in. It's still doing well. It's at what, $2,646 an ounce. That's up some $600 since we made that trend forecast at the beginning of the year last year. And that's up
Gold's rise, I think, is accelerating, and I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. Silver outperformed gold in the big run up till 2011 when it got up to $50, and now it's at $30, and gold's at $2,700. Silver is very cheap in terms of gold.
Please subscribe to our channel and activate the bell icon for timely updates.
In 1789, with the first Coinage Act, the Constitution ratified, gold was $20 an ounce. And when they created the Federal Reserve in 1913, it was still $20 an ounce. We had no inflation during that time period. In fact, we had falling prices for well over 100 years. We had the Industrial Revolution. We absorbed millions and millions of immigrants into this country under a gold standard. And, we built the strongest economy in the history of the world with a gold standard. So to say that the gold standard didn't work is pure nonsense. I mean, it's worked better than anything we've tried since. You say how high can gold go? I mean, there's no ceiling on gold because there's no floor on the dollar. Since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over $360,000 an ounce. So how long will it take to get there? It just depends on how much quicker we debase the currency. But I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300. And here we are, 20 odd years into it, 23 years, 24 years into it, and, we're 2,700. Gold's rise, I think, is accelerating, and I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. And I think that if the dollar fails, which ultimately it will, I don't see how you just replace it with another fiat currency. I mean, I can see how, you have some of these smaller countries and their fiat currencies collapse and they get wiped out and they dollarize or they peg a new currency to the dollar. Okay, because, we still have some, fiats that are working. But if the king of fiat, if the primary reserve currency collapses, we have runaway inflation, then what do? You tell people, well, just take the euro? It's better, take the yen. I mean, none of these currencies, are viable as, so the only thing that makes sense is real money. And so ultimately, that's where we're going to go. We're going to head back to that. I just don't know exactly the timetable or the path that we get there, but I'm pretty sure that's where we end up. You have as a hammer, everything looks like a nail, right? So all Michael Saylor wants to do is get the price of Bitcoin higher. And so, yes, if the U.S. government were to be dumb enough to sell all of its gold and buy Bitcoin, the price of Bitcoin would go up. I mean, at least while the government was buying. Once it was finished buying, it would come crashing back down. But yeah, I agree. Bitcoin is eating gold's lunch in the PR department. It dominates the media coverage. You probably have 10, 20 times, maybe more coverage of Bitcoin than you do of gold. The Bitcoin, they just had their big convention in Nashville. Over 20,000 people spoke or attended the conference, major speakers. Adrian and I just got back from the New Orleans conference, the longest running gold conference in the U.S., maybe 500 attendees. It's tiny compared to the international interest in Bitcoin. People are making a tremendous amount of money on paper in Bitcoin. Other people are realizing these gains by selling into mania. And I do think that there are some people who are buying Bitcoin instead of gold. I think most people who are buying Bitcoin wouldn't have bought gold. I think they're buying Bitcoin instead of some other meme stock or other speculative assets. So I think that the money that's going out of gold into Bitcoin isn't as substantial, though I think that's changed a bit this year ever since the ETFs were launched. I think the ETF buyers I think more of those guys took their money out of gold stocks and gold ETFs than the typical hodler who has self custody of his own coin, right? But I think some of the investor money was diverted. And I think that's why we had, the big outflows from the gold ETFs, and we had the weakness in the gold stocks. I think that was investors moving money out of gold in Bitcoin. That didn't have much effect on gold. Gold had a huge year anyway. And that's because foreign central banks were buying whatever retail investors were selling. Now, it's hard to say, how much higher gold would have been without that selling, or if the retail investor would have been buying in competition with the central banks. We will never know. But I think on the margin, sure, it's taken some of the wind out of gold's sail. But I don't expect that to continue. At some point, the Bitcoin bubble is going to pop for good. And as the air comes out, I think, that'll be a positive for gold.
Yep.
The problem that silver's had is the central banks aren't buying it. It's not the type of metal that they want to store. It's the people's gold, right? Poor man's gold. And so since the public isn't buying gold or silver, and the central banks are buying gold, that kind of leaves silver, without a lot of buying interest. And so I think that's why it's cheap. That's also a good opportunity, because when the public returns to the silver market, the prices are going to go much higher. And so, and if you look back historically, there's never really been a bull market in gold that silver hasn't, done better. Now, it's been a while since that's been true. Silver outperformed gold in the big run up till 2011, when it got up to $50. And now it's at $30, and gold's at, $2,700. So silver is very cheap in terms of gold. And over time, you would expect it to be a lot less cheap. Whether it gets expensive again, we'll see. I mean, it's possible that silver can get to the point where it's expensive with gold. But you'll make a lot of money if it just reverts to the mean. It doesn't have to become expensive, just kind of fairly valued based on the historic relationships between the metals that go back for a long ways. I mean, this is just not new data. You can, go back a long time, look at, gold versus silver.
Popular analyst Gerald Celente has named 2024 the golden year for gold, emphasizing its potential as a safe haven in the face of growing uncertainties in global financial markets. As the year ends, U.S. equities have continued outperforming expectations, delivering strong returns despite concerns over their high valuations and potential market corrections. This robust performance comes when U.S. economic growth remains resilient and corporate earnings remain strong. Meanwhile, China's stock market has struggled, and its brief rally in September, driven by expectations of fiscal support from the government, quickly faded by the fourth quarter. While U.S. stocks have reached new highs, bolstered by a thriving tech sector and investor optimism, China's market has been weighed down by the long-lasting effects of its strict zero-COVID policy, slowing domestic growth, and rising geopolitical tensions. However, Celente warns that despite U.S. equities' strong performance, significant risks remain. Geopolitical tensions, such as the ongoing conflicts in Ukraine and the Middle East, and potential policy changes, like interest rate cuts, could cause sudden shifts in market trends. While lower interest rates generally stimulate stock prices by making borrowing cheaper, they could also signal deeper economic problems, including inflation or rising debt. As the Federal Reserve is expected to reduce interest rates to boost the economy, this could weaken the U.S. dollar and increase the demand for gold.
Longest losing streak since 1978. Dow is down 267 points. The S&P down 0.39, NASDAQ down 0.32. Gold, again, gold lost its glow when Trump came in. It's still doing well. It's at $2,646 an ounce. That's up some $600 since we made that trend forecast at the beginning of the year last year. And that's up golden year for gold. So it's up $600. It was up, almost 800. But when Trump came in, the whole game changed. And oil, Brent crude, $73 it's selling at. It's down 57 cents. And boy, Bitcoin today hit what? $1,008. Now it's down to 1,005 and change. So here's the deal. So the equity markets, what's going on in the United States, very little to do with what's going on around the rest of the world. But there's a lot of positive hope out there. And there's a new study that just came out that's showing that a closely watched survey of global fund managers registered its lowest cash allocation on record this month, underscoring the bullishness on stocks as the equity markets nears the end of a strong year. Yes, in the United States. It goes on to say that another article from the Wall Street Journal, CEOs are taking a rosier view this year. CEOs of the world's biggest corporations are more optimistic about the economy than they have been in years. Last year, some 45% were positive. This year, it's 77%. The U.S. equity markets and the U.S. economy have absolutely nothing to do with the rest of the world. Again, we have the data in there. China's going to shit because of their 3 years of zero COVID policy. When they locked down the place, they destroyed the lives and livelihoods of hundreds of millions of people. And again, you're seeing that everybody's lowering interest rates as much as they can to keep propping up the economy. That's going to bring back inflation. And the United States, being a member of the club, we believe they're going to lower interest rates. And we are positive at this point on the equity markets, but there could be a wild card. Trump doesn't come in until January 20th. It's another month from now. There could be a dot-com bust by then. You saw what's going on with NVIDIA. They're in correction territory now. So this thing could go anywhere. They just killed a Russian general. Ukraine did. So that war could ramp up. Israel, its bombs away all over Syria, and now they're talking about attacking Iran. Oh, they just killed another, 15 Palestinians today, but it's not the news. You could slaughter the Palestinians every day. Nobody cares. So there are wild cards out there that could change this. But minus a wild card, we see the U.S. equities going up. We do not see the global economy responding as these CEOs are saying in this survey. No way, no how. So anyway, that's what we're seeing on the economic front here. And again, we have the economic update in your Trends Journal, what's going on with inflation, home sales, M&A, merger and acquisition activity, boom. Everybody's expecting it because of Trump in there, and they're going to do more deals. But that means they're going to lower interest rates, and that's going to jack up the M&A activity. As interest rates go down, the dollar goes down, and gold prices go up. That's the way we see it. Again,